The mother of all crashes is here. What Michael Burry just said about the markets. Inflation at a 40-year all-time high. Gas is starting to go down. Record low and low unemployment still. What is going on in the economy? And first most, what has been happening with Brotherhood Finance? Well, if you don't know, me and the other CEO, ColeNichter, are working very hard on new products and new packages to give you guys to really allow you to achieve financial freedom during this recession. We're going to be diving into a lot of information today. Where does Michael Burry think the bottom of the market is? What is the airline showing us? What is the Delta CEO saying? What is the price index showing? What is the fear and greed index showing? All this stuff we're going to be diving into today's video. Before we dive into that, as always, please make sure to smash the thumbs up button. Make sure to subscribe to our YouTube channel if you have not done so already. And again, we're going to be having a multitude of courses coming out here shortly that are going to be number 1, Investing University, and 2, Real Estate Mastermind. We've been putting hundreds of hours into these packages, as well as updating our website. We've done clothing, we've done shoes, we've done a whole bunch of stuff. We're going to be adding those courses, as I mentioned. So all you have to do is reach out, contact us, look us up at brotherhoodfinance.com. We're going to be more active on this YouTube channel again. Leave me some comments down below. What are you guys looking for me to dive into? Furthermore, let's dive into this awesome video, the mother of all crashes, and much more. Let's dive into this right now, brothers. Now, first and foremost, if you don't know who Michael Burry is, he is from the movie The Big Short. He has predicted, inflation for multiple times. He has predicted when the crypto market was going to crash around $60,000 for BTC or Bitcoin. And he's also said that Elon Musk stock, Tesla, is also going to crash, and he shorted that stock, and he's already made a multitude of money from that as well. Now, what he's saying is, he says that the stock market is dancing on a nice edge, and fears he's being ignored again. Now, if you look at the PE ratio, which is the price to earnings ratio, we've gone over this before at Brotherhood Finance. You can see Black Tuesday, Black Monday, and etc. And you can see that still the price to earnings ratios are still relatively high. And as you can see, every single time there's a high PE ratio, we usually break down lower to where the prior one was. Now, what is Michael Burry saying? And if you don't know, where can you get his information? He is only on Twitter. What he does is he makes accounts, and then after he makes those accounts, he then deletes those accounts rapidly. He says that the S&P 500 bottomed 13% lower than the 2002's bottom in 2009, 17% lower than 1998's crisis low in 2002, and 10% lower than 1970s. So pretty much what he is stating from this is every single time, people think we're about to bottom, but then we continue to bottom even more. And that these are occurrences that continue to happen. Now, if you don't know, we've talked about Brotherhood Finance. These typically happen around every about 8 years or so. So it's imperative to look at about every 8 to 10 years that you're probably going to have some sort of drop off in the market, but it's actually healthy. And as you know, you want to buy low and sell high, and this gives you a great buying opportunity. I personally think that this recession that we are currently in, what do I personally foresee? I really see that we're most likely going to continue to go down. Real estate's probably not going to bottom for another 1.4 years, maybe 2 years or so, because it always lags behind. Additionally, on top of that, I think we're going to start recovering out of this recession at the beginning of 2024. And I think we'll start to, get that bottom, as I said, around late 2023. So that's my opinions. We're going to be diving into more of why I foresee those numbers. What are some airline companies saying? And let's keep diving into what Michael Burry says and why this is going to be one of the largest transformations of wealth, as well as the mother of all crashes, as he stated. Now, he says, third time's a charm. 10 years leading to a financial crisis. Yellow and S&P 500 2000, white and S&P 500 today, green down 1929. Got to love human nature, nothing if not consistent. This is showing us that again and again, there is a consistency and a pattern that happens in this markets and in the equities market, and I couldn't agree anymore that we most likely have more room downwards. He says this, he says, as I said about 2008, it's like watching a plane crash. It hurts, it is not fun, and I am not smiling. That is unfortunate for him to say. Now, if you look at this metric right here, this is still showing that, first off, you have a record, not only inflation very high, but unemployment is still pretty low. However, as I mentioned in the other video that we came out with a while ago, I mentioned that people are starting to get laid off. You're already starting to see it, not only in cargo and moving goods and services, the technology sector as well, but just a lot of facets involved in these industries. It's going to take some time, but unfortunately, I do think we're going to see more layoffs ahead. And that's, as you know, we're going to see more of a bottom in the market. Now, real quick, talking about oil and the price of gas. If you looked at 2008, 2009, we've gone over this as well. You see gas goes on a very high straight trajectory upwards, and then it completely falls off a cliff. And what that is showing in like 2008, 2009 is typically oil prices rise as the economy continues to weaken over time. And then after the economy weakens quite a bit and it gets to its bottom point, that's when oil starts to go back down, and that's when gas prices drop rapidly. Now, what is he saying about savings levels? Personally, I think this bubble is worse than most people interpret or anticipate due to record high debt levels. Negative GDP is already showing that we're in a recession. We have those 2 quarters. But if you look at U.S. personal savings, it fell to 2013 levels. The saving rates to 2008 levels, while revolving credit card debt grow at a record-setting pace back to the pre-COVID peak, despite all those $1 trillion of cash dropped in their laps. He says a consumer recession and more earnings trouble are ahead. And he also says that he doesn't think we're going to see the bottom of these savings, when people are going to reach that bottom and have no money left until September and December of this year, when people are then going to have to borrow. Now, as far as fear and greed index, we are still at extreme fear in the marketplace, and I expect that we're going to see that. Just off topic real quick, it's really quite informative to me. Just getting some awareness to you guys is a lot of people go to me and they go, well, Brendan, the market is not going in a straight line down. I said, no, of course, that never happens that way. You're always going to have, those bottom peaks and then those top peaks. So the peaks and the troughs, those are going to occur. And a market doesn't just go straight down. It takes time, especially in a recession. It's more of a longer term bleeding pain. What happened in COVID was not very common at all. And we're not most likely going to see something like that happen again. If we do, it's going to be very hard for the Fed to bail us out. They've printed trillions of dollars. Now we have hyperinflation, the highest inflation in over 40 years. And they're having to raise interest rates, which is making other asset vehicles less appealing and less attractive, which in turn is also going to affect the housing market terribly, which we've gone over as well. But that's, with that being said, they can't really prop us out this time because we're at too high of inflation. If you look at history as well, we have never had interest rates this low over a longer period of time. And every single time we have high inflation, they can never raise those interest rates higher than the prior time they raised it before, because as we've seen, the dollar continues to die over time. Now, again, there is low unemployment. What else can we talk about with the market bottom? Again, we're having record lows right now. Great times to go in and buy companies. We really preach this at Brotherhood Finance, as time is your best asset. The market averages are looking a little bit better. The falling costs of oil and stuff like that, that's great. And same with, the oil pricing. And I continue to see, I think what we might see oil pop up quite on a peak again and then maybe fall off really rapidly, like happened in 08 and 09. However, that will be another great indicator to look at. Hopefully we can see some price of goods and services continue to go down, but things are looking quite dicey right now. Now, going back to what I said before, when we're talking about what Michael Burry has to say, he says dead count bounces are the most epic. And what he means by that is he's pretty much saying that people will think that a little bit of a rally in the middle of a recession shows that the market has bottomed. And he's really showing that that's not the case. That's just, a good way to pretty much show you that it's a dead cat bounce. And those are typically the most and the biggest rallies that occur during recessions, depressions, or any heartache in the marketplace. He says 12 of the top 20 NASDAQ one-day rallies happened during the 78% drop from 2000's top. 9 of the top 20 S&P 500 one-day rallies happened during the 86% drop from the 1929 top or depression. Now, if we look at the VIX here, which measures the volatility in the marketplace, we can still see over here that we're not anywhere near coronavirus level highs or anywhere near 08 or 09, which also kind of gives me some certainty that we're most likely maybe half, not even halfway to the bottom in my opinion. So that's something to keep in mind as well. Alrighty, now after diving into that and keeping that in mind with the VIX, now we're going to talk about global equity strategy. This is from Jamie Dimon and some of those other guys over there in the banking industry. Not only that, but we're going to talk about Michael Burry as well. Again, he says that there's still a 50% drop to go. That phase one of the bear market tends to be driven by derating on the back of higher rates and recession concerns. And then next it's going to be doing with the forward PE, which also is showing that we're most likely entering the second stage of a recession from Burry. Now, supply chains are easing. That is something that is good to keep in mind, is supply chains are finally not starting to be as bad. We had a chip problem. I heard there's supposed to be a lot of chips incoming over the next coming months, which is great news. And keeping that stuff in mind, that supply chain constraints are finally coming down. Commodities are doing bad as well. What is going on with that? Commodities are typically a decent and a pretty well way to pretty much at least hold the value of your money in an asset vehicle like gold or silver. But even food prices are on a sky high. You got Brent on a sky high. Metal is still pretty high. But again, these things are all starting to come down also, as well as lumber is starting to come down also. Now, notably, the average consumer is spending 35% more year on year on gas and approximately 6% more on recurring bills. That is important to keep in mind. But he says we have yet to observe a pullback in spending, including in the lower income segments, which is crazy, with travel and dining growing a robust 34% year over year basis. That is nuts. All right, now let's talk about airlines. We've talked about Burry, what Burry expects, what he predicts, the mother of all crashes. We talked about gas. We've talked about the demand, the housing market, and a lot of other things. Now let's talk about Delta Airlines. Delta Airlines says we expect more than 60% of revenue will come from premium products and non-ticket revenue sources by 2024. That is ridiculous. That means a multitude of their money is not coming from tickets. And he says premium will continue to grow. This is showing that although people are maybe seeing that we're already in a recession or we're headed towards one, depending on their frame of mind, they are still paying the premium to go travel. He says, historically, more price-sensitive products like basic economy, which is currently less than 10% of our sold fares, have struggled to keep up with inflation, while high-value premium offerings perform much better and are proven to be more resilient. That is important to keep in mind. And again, there's a record number of new SkyMile members, which is coming from the Platinum and Reserve cards, which is from APMEX. Now, if you look at the median checking account balance, this is showing where certain families are due to their income bracket and their savings rate. The highest quartile is about $6,000, which is pretty good. The third is around the mid of that, about $3,000. Then you have the second and the bottom. But what's really key to look at right here is you're seeing that it's relatively the same. It's not really drastically shifting one way or the other, which is very interesting to keep in mind as well. Now, is there any weaknesses in the consumer? Amex is our closest and best partner, and we talk to them consistently, and they're not seeing any indications yet. Again, this is coming from the airlines. And what is so crazy to me that I still can't get over is that it says 60% of their revenue doesn't actually come from tickets, but it actually comes from other revenue sources and premium products that are non-ticket revenue, which is ridiculous to me. But what they do state is that they are looking for it. Now, when we talk about Delta Airlines again, roughly 10.1% of all of their revenue is coming from that Amex credit card deal that they have, which is what they're predicting and what they're having right now, as you can see in their income statement and consolidated statements of operations. Again, brothers, that was the video for today. I still think we have quite some movement to go downward. Leave some comments down below. Did you find value in this video? What did you want to see differently? What should I dive into next? I believe real estate is going to be the last thing to get hit, as it always is. There's going to be some great buying opportunities in there. But now is the best time to learn. Now is the best time to use your financial education you've learned from Brotherhood Finance. Go check out our new products. We have new shoes. You can get Air Force shoes with the BHF logo on them. You can get a brand new t-shirt, new BHF designs. We'll make sure to leave some discount codes in the further videos. We're still working on our university courses right now, but give our website a look out. Get on our email list if you would like to. Check us out on other social medias. It really means a lot. Again, I'm not going anywhere, brothers. Brennan is back. Brotherhood Finance is back. We're going to have some more content for you. We're going to be diving into how you can really get ahead, in this market, in these conditions, always keeping that great frame of mind and much more. Again, I always appreciate you stopping by Brotherhood Finance. I hope you came across this video. That way you know what to look for, what you can see for gas, what Michael Burry is saying, what the airlines are currently seeing, and what they may be predicting in the future, and much more. Again, thanks again for stopping by. Have a great rest of your day, a great rest of your weekend. Peace, brothers.